CEO Rishi Gupta here with us. Fino being an aberration, just the way the stock price performed yesterday also. For the year, however, it is still down 30% plus. Mr. Gupta, good morning. Thanks so much for giving us time. You're a fintech player that is standing out because you are already profitable. And there has been strong quarterly growth as well. When we, in fact, look at it, revenues are up, 5% quarter on quarter. Can you talk to us about what the levers of growth are and how you're going to ensure you stay profitable?
Our growth has been quite consistent over the last 4 to 5 years. If you look at, we have grown at more than 30% plus CAGR over the last 4 or 5 years. We expect to maintain 25% growth now that the base has become quite large. We expect to grow at 25% plus over the next years as well. The reason for our growth is the fact that we are continuously expanding our distribution points across the country. We have more than 12.2 lakh distribution points as of September across the country. We are also increasing the number of products which we are able to bring to those customers. Because of the increase in the distribution points, you can expect that the volume growth has been substantially high in the last year. We did nearly 1,87,000 crores of throughput as such. We are seeing a substantial growth in this half year as well on the throughput. Because of the customers who are coming to our point and doing transactions, we are also able to convert some of them into our own customers, which is savings. That number has also substantially gone up. It has gone up to 7.5 lakh numbers on a quarterly basis compared to maybe 4.5 to 5 lakh number in last year. So growth is across all segments, whether it's on the transaction platform or whether it is on the account opening platform and on payment services platform. So growth compounded by distribution and addition of products leading to customer acquisition, I would say, is the strategy which has helped us to grow our business regularly.
Mr. Gupta, let's also talk about your OPEX because the cost to income is coming down, and that's also a case of leverage playing out on your profits. Where can we expect your cost to income to normalize?
So our operating leverage, or if I look at our cost to income ratio, was at 30% in Q2 of FY21 and 22. And right now it is at 26% in last quarter of FY23. We expect the numbers to fall from here also as the volume of business grows up. See, our business is a very asset-light business. It's not a very fixed cost heavy model. We work with a lot of merchants on the ground, and a part of the income we share with the merchants. So as the business keeps on growing, it's not that our fixed cost will keep on growing. Our fixed cost is fairly static. In fact, the largest fixed cost for us is on the technology side over and above the manpower which is there on the ground. So we don't expect to grow our manpower, neither do we expect our technology cost to grow up substantially. So I would say we have already brought it down to 26% from 30% on a year-on-year basis. We should look at number further going down, maybe below 25 is what our target is in the near term. And I am sure we will be able to reach that number.
You've also been building on your CASA. So talk to us about the growth here, how you're leveraging on these funds, how you're leveraging on your customers as well to grow your CASA.
7.5 lakh customers in the last quarter. And all of them are subscription-based, or most of them are subscription-based accounts. So there are multiple revenue streams which we get from the customer. We get a minimum subscription amount which is there. We also get balances which have substantially grown from 700-800 crore rupees or 700 average to nearly 1100 rupees average on a customer side. So growth in balances also results in higher treasury income and higher margin, so to say. Plus the cross sell which we are able to do with the customer, which about a year back was very little. Now it's growing. It's growing, I would say, not substantially, but marginally it is growing on a yearly basis. So we expect that the subscription income leading to higher balances and leading to cross-sell, which we say ABC. ABC means activation, balance, and cross-sell. So our strategy on CASA, which is on ABC methodology, is started to play. And I expect that as the business will grow on, as we move into the next years, the opening balance of CASA will result in a higher renewal income in the years to come. And as the balances keep on growing, our treasury income will also grow. And as we bring the digital ecosystem along with our physical reach on the ground, our cross-sell abilities our ability to cross-sell more with the customers will also substantially improve in the years to come. So the CASA strategy is playing quite well.
So, guidance going forward as far as CASA goes and how that story is likely to pan out. Mr. Gupta, I want to zoom out a little bit and speak to you about what's happening overall on the Lal Street. You know, a lot of our viewers will want to get your views in on this. I started the interview by saying Fino Payments Bank is standing out just the way its performance has been recently on the stock markets. Yes, yesterday, for example, was a fantastic day for you. For the year, Fino is still down 30% plus. You mentioned that your top line should grow by 25%. You're already profitable and one of the few profitable payment companies out there. Now, having said that, can you talk to us about how you're going to acquire new customers, how you're going to grow and still stay profitable? Because that's, I think, what the street will also want to hear.
See, unlike other banks or other entities in the space, we are a profitable entity. And for us, building up payments business, then liabilities business has been the forte, and we are already profitable. As you know, we are running on a 10% plus EBITDA margin in the last quarter. So with vis-a-vis that, credit for us and investment products for us is a growth story. So anything which I do on the credit and the investment side is going to substantially improve my bottom line over the years to come. We are already profitable. We had about 4.6% margin in last quarter compared to 3.5% in quarter one. We expect that margins will further go up in quarter three. The first 45-50 days have already gone by in quarter three, and the numbers are looking healthy. And I come back to your first question in terms of what do you believe, how sustainable is the growth on revenue is there? We are quite confident that the numbers, what we have projected, both on the expected or projected, both on our revenue as well as on our growth, we'll be able to achieve it.
You're ambitious when it comes to wanting a small finance bank license. How will that be a game changer for you? Can you tell us also, you know, if somebody wants to take a position in Fino Payments Bank today on the stock markets, how large, where will it be with a longer term view? I mean, not very long, but let's say 3 to 5 years.
If I look at a 3 to 5 year strategy, our strategy is very clear on this. We are a transaction bank. We will continue to be a transaction bank. Right now, we did 2,000 crore plus of top line last year. Looking at the 25% growth which we envisage to come over the next few years, we should reach 2,000 crores in the next 3-4 years. So we are a transaction bank. When we convert into a SFB or in the first couple of years, we'll have a very high chunk of transaction income. I don't think so you will see any other SFB which will have a pure transaction fees of 2,000 crore or in that vicinity. 2,000 crore of transaction fees with nearly 20 lakhs merchants on the ground with the data which has been built up on that merchant. And the third is the customers. We already have a 60 lakh customers. We are adding 7.5 lakh merchants, customers every quarter. So we should be able to reach 2 crore customers over the next 3 to 4 years. So 2,000 crore top line with 20 lakh merchants with 2 crore customers. You can see that is the foundation at which we will go into an SFB. SFB for us is a regulatory approval to offer credit. Credit for us is a product. We are not going to become an asset heavy or an asset driven bank. We'll continue to be a transaction bank, but offering credit rather than through somebody else's book, through our own book, which will help us to also make more money on our liability, which we are able to raise compared to what we get on a government securities or a GSEC income. So strategy on which we call the power of 3 Ds, which is DDD, One is the distribution which we have created, through which we'll have a lot of data on our customers as well as our merchants. So the first is the distribution, the second is the data power which we will have, and third is the digital overlay which will be on top of it.
Joining in then, Mr. Gupta, and sharing with us your growth outlook and views on Fino Payments, and that's the management talking about their overall earnings growth and trajectory. The stock was up and away yesterday.